All right, Mark here. Thank you everyone for joining me today for our Greenbridge Investing market analysis. So as you know, I'm streaming this live and I want to welcome all questions. In this session, we're going to be going over Bitcoin, the major markets, and select stocks. Hopefully you have some tickers you'd like to see. If not, I have some of my own. And obviously there's some stuff going on here in Bitcoin. We had a swing trade that got activated, so we're going to talk about that as well. All right, so if you're new to Greenbridge Investing, please make sure you check out our website at greenbridgeinvesting.com. We have an active investor chat room, we have a free chat room, and we have signals, portfolio management ideas, and analysis that we send out, especially in the chat room, each day. Okay, so with that being said, let's get into this here. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, normally we have our podcast today at 4:05 p.m. Eastern time, but we're not doing the podcast today, okay? So we will continue the podcast next week, next Monday at 4:05 p.m. Eastern Daylight Time. And so today, obviously I can get this out, but yeah, so no podcast. Just want to make sure that's clear. All right, so before we get into the chart, of course, we have to run through this because especially for Forex trades, we have some trades on the radar that we are very interested in taking this week. So we want to at least know what's going on in terms of economic events. Again, feel free to ask me questions as I go through this. I don't want to spend a lot of time on the calendar because, we have a lot of charts to go through here. So first thing is, I'm looking for any reports that are important or any speeches or anything. Okay, Bank of Canada, we're not in any Canadian pairs, so it doesn't matter. These German numbers doesn't really matter. I mean, for the euro, possible, all right? It's possible, but these aren't major numbers, okay? Now, the euro has a nice setup that's developing in it, same with the pound, and we're interested in those pairs as far as a swing trade long. We're not going to take both of them. We're only going to take one. So, if there's any reports here that can affect either one of those pairs throughout the week, we want to make sure we know about them. So Great Britain, we have market services PMI. Again, these aren't huge numbers. I wouldn't expect any dramatic moves either way from these numbers. Now, Royal Bank of New Zealand rate statement, rate decision. That's a market mover, but we're not in the NZD, so we don't have to worry about too much. Like if they have this surprise in there, I don't think it's going to have a major effect on the US dollar or on something like the pound or the euro. So, again, no big deal. Inflation report hearings, okay, I wouldn't worry too much about that. We have for the ECB monetary policy meeting accounts. I mean, I don't even know what that is, but it's probably not that big of a deal. And for the US on the 25th, when is it? Like in 3 days? So what is that? Thursday, we have GDP annualized, we have initial jobless claims. So that's if there's any really negative surprises in those reports, maybe the dollar will react somewhat, but those aren't major, okay? I don't see any FOMC meetings. I don't see any NFP. I don't see any of those things. So not really a lot going on in the economic event front, which is good. All right, so now let's get into the charts here. So again, if you have questions, please make sure to ask. Also, if you're new to the channel, make sure you subscribe to the channel, at least, or press the like button so that every time I send out one of these, every time I conduct one of these, you'll get an email notification from YouTube and you can join in. All right, so Bitcoin. We had this trade idea that we sent out like way back here. I mean, it's the same trade idea. We reissued it. We just changed the stop and made the stop lower. But this activated because if you look at the high here, it's 96.31. All right, and I believe the order was 96.25. I don't have the information in front of me. But so this trade is active. Now, again, it's based on a couple of things. The pin bar, number one, we had the large pin bar, which never really went anywhere, right? Kind of messed around for the whole week and produced nothing. Then we had this pin bar on Saturday, all right? Now, that pin bar, I talked about this in my TradingView article that I put out, my video that I put out yesterday. I said, that's a new buy signal. But what makes this hard to deal with is the location. Because look, you can get pin bars anywhere. What makes a pin bar more valuable or less valuable is where it appears. This thing has appeared, same with the previous pin bar, just, it's a big pin bar. The size of the pin bar, that could be significant, but the location carries even more weight. These pin bars have appeared in the middle of the range being 76.95 low to the 10.400 high. So that introduces a higher element of randomness to this type of trade because we're in the middle. It's 50-50 here. Now we got this nice bullish candle, which is getting everyone excited. Okay, I have a question here. Is this a fake out on Bitcoin? Well, to answer that question, there's no way to know if it's a fake out because, right now we just have a solid green candle. And if that candle stays intact by the close, that's a good sign. Now we still are dealing with this resistance zone between 95.64 and 10.168, but we have a lot of bullish things that favor a breakout. And that's all we can go by is the probability. And that was one of the points in my article yesterday was, it's about the probabilities, not predictions. People always want, tell us that Bitcoin's going to 20K tomorrow. That's what people want to hear, but that's not reality, okay? People, you can't really make predictions in these things. All we can do is gauge the probabilities, get an idea of which side the market favors, and then try to justify taking a risk on that side. Now, so we have buy signals, we have this broad consolidation, which is a higher low structurally relative to this bullish movement going back to that 3,800 low. So chances are, if this thing clears this resistance, we'll get some follow through this time. Why? Why should we get follow through? The reason is once it clears, remember, you have a lot of shorts in this. People keep insisting on shorting it. People keep on consuming this information that says Bitcoin's going to 6,500 and 3,000 and all these opinions. And that's fine if they want to take the other side of our trade. But when they get caught and they get margined out of their position, that creates more buying pressure. And that's when you see the squeeze. And that's typically what will occur at a breakout. On top of that, you usually get all the people who just take breakouts because that's the obvious thing to do. They all jump in too at such a level. So you get like double the buying pressure. And that's when you see it like a really broad move outside of a breakout. And the longer the consolidation, the greater the chance you're going to get a broader move because that's a lot of, remember, half of these people are short and they're going to get squeezed. That's the process. That's just what that occurs over and over again. So again, this is a great sign. We just have to let it ride. Just let it do its thing. Now we let the market determine the outcome of the trade. Okay? So any questions on that, let me know. Bitcoin's looking good. Nothing to do there. Now keep in mind this is going to lead the altcoins along with it. I know Andrew put out an alternate trade in Ethereum in the chat room earlier today. I saw that. So if you're a member of the chat room, just scroll back and check that out if you're more interested in something like Ethereum. We're not going to send out a text message on every single one because it's all the same trade. And that's the important thing to understand. If you buy Bitcoin and you buy Ethereum, it's basically the same. All right? So, hey, Reese. So no, the answer is no. The stop on something like this is not below the pin bar because that's too obvious of a place to put it. I believe the stop on this one is like at 8,900 or something like that. I don't have the information in front of me. I don't because we sent that one out like a week ago. So I believe it's below 9,000. Yeah. So they're all going to look good because Bitcoin is the leader, and when Bitcoin makes a move, they're all going to move. So and Ethereum has been relatively strong. So it should have a nice move along with Bitcoin. Just keep in mind, if you own both, it's just basically you're owning more Bitcoin. That's the way I like to think of it. Until Ethereum and all these other altcoins can start trading on their own merit, which they're not doing yet. All right, so that's Bitcoin. Again, if you have any questions, please let me know. Okay, yeah, Reese, if you look back at the text message, it's on the text message that we sent out like a week ago. That's the stop that we're using. Okay, so there you go. Thanks, DJ. Yeah, that's the lower stop. Thank you. All right, so now let's take a look here at the NASDAQ. All right. Now, the NASDAQ, this has been a tough spot. So Friday looked bearish, right? We talked about this on Friday with this bearish pin bar. And people were starting to say, oh, the market's turning. Oh, everyone starts getting bearish. Oh, there's a double top. All this other stuff. All right. Yeah, sure. There's a double top until it doesn't work. Right. Now, today we get this very strong candle. And that's just stay out of this thing's way, basically. Taking shorts on information like this. And I said in the chat room, I said it in the free chat room too, it's premature. And the reason is when a double top begins to develop, yeah, you may have the top, and for a day trade, that's one thing. But if you're going to try to get short and try to ride a broader move, there's no reason, because this thing hasn't proven anything. All we have is a higher low, and now it's making an attempt at a higher high. That's all we have. And in fact, this little section here with this red candle, that pin bar, that can be another mini higher low, which means this thing is just strong. So until we start taking out support levels on that NASDAQ, there's no confirmation of bearish momentum, and it's way too early to call this thing a short. So what does this mean? For stocks, this is a good sign. All right, we've had a lot of great stock, a lot of great stock picks over the previous couple of weeks, because we've just been finding setups, going long, rotating out of them, finding another setup, going long, rotating out of it. Okay, and that's what we're just going to continue to do as the market pushes higher. Because this thing is poised to push higher. As it pushes higher, the risk of retrace increases. So you have to keep in mind, the higher it goes, we don't want to become more aggressive. We want to become more cautious, right? Because, once it starts pushing this previous high over here of 10,158, once it starts pushing that, the market becomes very vulnerable for a fake out at that point, right? That's when you can get a failed high. It's very possible. Will we get it? I don't know. But if it appears, that's what we want to be prepared for. So if we have 100 different stocks and we have all kinds of size, we're caught. That's when you're caught in a really tough spot. We don't want to be in that position. So that's why we'd rather take small bites. And if that turn comes, and we get stopped out of a couple of things, okay, no big deal. But we've been taking our profits all along, and that's basically how you play something like this, because remember, we're not buying the bottom. If anything, we're buying near the highs here, and that's usually a more vulnerable place. Now, the herd, the average trader or investor typically feels safe in a situation like this. They just buy the breakout, and they feel safe. And you can't really fault them too much, especially if they're not informed, because they're watching things like the news, and the news is saying things like, oh, the NASDAQ today is up 10,000 points and record highs, and, hasn't been this high in 10 years and all this other stuff. So they amplify all this positive sentiment. So people feel comfortable and complacent, right? That's just normal behavior. That's usually who's buying up in here. All right. And that's where you should be the most cautious. Meanwhile, at the lows, and like we were talking about when we were at these lows, we were looking for buying opportunities, because that is where you look for buying opportunities. This is where all the potential is. Now, after the fact, sure, I can say that. But during this time, as many of you know, we were buying stocks, okay? And we were taking our profits all along the way here. So that's what you have to keep in mind up here. Do not get comfortable or complacent. Be more cautious the higher it goes. Doesn't mean you turn bearish. Doesn't mean you start shorting. It just means you're more cautious. And if bearish signs show up, you're decisive to get out. Even if you get out and it goes a little higher, who cares, right? You want to focus on risk more than anything else at such levels. Okay, so I talked too much here about the NASDAQ. So let's move on to the next thing here, which is gold. So again, if you have any questions, please feel free to ask. And let's take a look at gold. Wow, look at gold. So we've been very patient with gold. As you can see, we have a trade that's been in play for a while. This trade was called back here, okay, at this inside bar low, at the range low, at 1703. All right, that was a while ago. That was like June, what is that, June 7th? All right, so that's when that trade was called. And since then, it's reached its first target. Today, it's what? Oh, it was 2 points away from the second target. Look at that. The second target is 1765, and today's high is 1763. Look at that. Okay, so it's almost at target 2. If it clears this resistance, which is the range high, if it clears that, 1800 is not that unreasonable. It's not that difficult for this thing to reach. On top of that, you have this nice higher low consolidation, and this thing broke out of it's poised to break out of this broader consolidation. Now, this consolidation was tough to trade. We missed this trade back here, this pin bar, and we had to wait for this opportunity. Gold may not have given us this opportunity, but it came along and we got involved, okay? But that's why you have to be patient with these things. When it was doing this stuff over here, yeah, there was some pin bars, and this looks very similar to what Bitcoin has been doing recently. There's some pin bars, but we weren't going to issue new trades here. For one, we're still in our same trade, and for two, this is a much higher risk area because it's near the range high, okay, and the potential is lower. That's why we didn't send out a new gold trade. Now, if you have gold stocks, I mean the gold stocks like Newmont and all those, they're going to be doing okay in this. If this thing breaks out, you should see a nice boost in the stocks as well, because not everyone could trade the CFD, apparently. So that's the alternative for there. So we're planning to do a gold trading or a metals trading webinar, and I'm going to try to do that this Sunday. So if we do that, I'll be sending out the invitation. If we don't do that one, we'll do something else. But the goal is to do a webinar on metals trading, and that includes physical, like coins and stuff like that, and paper instruments like CFDs. Okay, so Shashank, how can I trade in Forex? Well, you have to have a Forex broker to trade Forex. There's many different ones. You should research them. We use MyFX Choice is the one that we use because they allow us to trade CFDs. Okay, so anyway, so that's gold. If you're in this trade, there's nothing to do but just let it ride. Okay, let this thing go to its targets and let it do its thing. When you're sitting through all this consolidation, as long as it's not taking out any supports, as long as it's not doing anything to negate the trade, you just have to sit back and just deal with the noise. Okay, this patience really does pay. So anyway, let this thing run, and good to see there. Okay, good to see. All right, so next thing on the list here, let's take a look at pound. Now the pound against the dollar, we've been talking about this one. We had a trade in this recently from 2605, or was it 2605? I believe the trade was, and I think I have it in my other chart here. Let me see here. Yeah, this was our original trade. All right, and it got stopped out. Okay, hold on here. It got stopped out at 24.45 on this pullback. Okay, we had this bearish pin bar show up. We chose to stay in the trade, and we chose to let the market determine the outcome, and it stopped out. All right, no problem. So we lost like what, 160 pips there or something like that. Okay, that's part of the game. But we only had 1% risk on. Now we have this candle developing here, and we talked about this in my previous analysis. I even asked the group here. I said, is the pound a long or a short? And everyone says, well, it's a long. So everyone saw the same thing that I was seeing, was this is just a pullback. And here we are. Here's our bullish candle. Okay, now this is not an ideal setup because it's not a pin bar. It's not an inside bar. But it's basically an outside bar. And that's okay. We're open to taking outside bars. So let me go back to my other chart. I left this trade on here. That's our old trade. So we're looking to issue a new trade in the pound, and that trade will possibly be sent out by text tonight. And so here's the support and resistance. And I talked about these levels in my previous analysis. I mean, you can go back and watch the video, which is on this channel here. And I said, if it develops, if we get the buy signal in between these levels, 22.85 and 24.80, if we get that, we're still open to going long. Now, we have a outside bar. It's a large bar. The high of the bar is 24.77. The low is 23.35. That's about 150 pips or something like that. So the risk is, again, it's going to be larger because the candle is large. We're not going to put the stop right at the bottom of the candle where everyone else puts it. We're going to put it lower. So we have to compensate for that and take a smaller position. So I can tell you right off the bat, it's going to be a 1% risk position. All right. So anyway, we'll see how that plays out. But this is a candidate. It's either going to be this. If we don't call the pound, then we'll be calling the euro. It's going to be one or the other. I mean, look at the euro. And obviously they're reacting to the same news, whatever it is. I don't know what it is. I really don't care. But, you know, the euro structurally looks a lot nicer because this higher low is much more, it's much higher. This is a nice Elliott wave pattern going on here, wave 4 into wave 5. It's much clearer than the pound. So it's just the euro doesn't move as quickly as the pound. So we have to see. We have to see which one we choose. We're not going to choose both because it's basically the same trade. All right, long euro or long pound against the dollar. All right, so that's those two. Now, anyone have any stocks that they'd like to see? Because the first stock, you know, the first stock I'm going to check on here, right? You know what I'm going to check? By the way, if, you know, for those of you that normally check out our podcast at 4:05 p.m. Eastern time, we're not doing the podcast today. Today, we're just, you know, we just have this analysis here. We'll be continuing the podcast next Monday at 4:05 p.m. Make sure that you subscribe to this channel so that you'll get an email notification when we do our podcast. Usually we cover different topics in the podcast as well. Okay. Okay, cool. So we'll take a look at SPCE and WIN. Now, so Roku, here's the Roku trade that I called back on the 28th of May. Okay, back here, or 27th. This was the this was the candle back here, 27th. And we had to take some pain on that, and it worked out real nice. Now, today's high on this thing, Roku, 134.79. Again, it's very close to that 136. It just hasn't gotten there yet. We have another ugly pin bar, bearish pin bar, but we've reduced our risk by 2/3. So, I mean, hey, look, if you're in Roku and you don't like this pin bar and you just want to take your profit, and, you know, what's this thing at right now? 129.08. So, you know, you're giving up, what, an extra 5 points possibly? I mean, what's the big deal, right? A profit is a profit. There's nothing wrong with taking the profit. That's where you can use your discretion on something like this, because some people may say, you know, I'd really like to take that profit. And what if it never gets to 136? What if the market pulls back and this thing gives it all back? Take your profit when you can. Now, for us, you know, it doesn't really matter a whole lot. A lot of times we just let it ride, and if it pulls back and whatever, we take less of a profit. You know, it doesn't really make a big deal for us. But for our members, we want to make sure that, you know, you have the best experience possible. So if it doesn't go to that third target and it starts to, you know, if you don't like this pin bar, don't hesitate. You know, feel free to use your discretion. If it fakes you out, right, and you've locked in a profit and it goes higher, you still locked in your profit. You've still won. So what if you don't get the target? You know how many times something will go beyond our third target by a lot? We don't get upset. We had a good reward risk and we took our profit. That's all you can ask for. Okay, so just keep that in mind with something like Roku, because we're probably not, you know, if we make an adjustment, we'll send it out by text, but we're probably just going to let this thing do its thing. Okay, that's usually what we do. Hey, AT, thanks. Okay, so let's get into some other stocks here. All right, and thank you everyone for your stock suggestions, coming here with your stock suggestions, because I want to make these sessions valuable to you, and this is the best way, right? Taking a look at charts that you'd like to see. So here's this one. Now, this one, you know, this one kind of got affected by some fundamental stuff going on. And again, I don't get caught up in the fundamentals. All I'm interested in are the technicals. Now, you have this nice gap today. All right, this thing is up $2.28 right now. This is a, you know, it's trying to gap outside of this range, but you cannot ignore that there is a range in there. Okay, there is a consolidation, and you can't ignore this. Okay, you cannot ignore this, and you're still inside of it. So here's the thing. If you're in it, then hey, this is good news. You just sit back and basically wait to see if this thing breaks out or not. If you're not in this thing and you're interested in it, well, you know, this candle is a good start as far as an attempted breakout. You have a gap. I mean, you know, it doesn't really matter that it's a bearish candle. What matters is that it's trying to push outside of the range. The key thing for something like this, okay, no problem, Reese. The key thing is the risk, right? That's what you have to ask, because everyone focuses on, well, should I buy it now? Is it going to go higher? Can I make money in this? Well, the key thing is, if you're wrong, how much do you lose? That's the real question that's the first question you should ask of any investment or any trade that you're looking to put on. If I'm wrong, how much is it realistic to lose? Now, and what do we base that on? So for short-term trades like swing trades, we're basing that on a nearby support level or some kind of level that we can see. And in this situation, that would equate to like this 14.25 area. Okay, 14.25. Now, should you put your stop? Like, so if you buy this thing today, or maybe you wait till tomorrow, okay, on the break of today's high, and you buy this thing, should you put your stop at 14.25? Well, no, because that's the obvious place. So you have to put it lower, maybe 13.75, maybe a dollar lower, 13.25, right? That's plenty of room. It really has no business going back to that price if this thing is going to hold this consolidation and break higher. So that's the way you have to look at it, okay? And if that's the risk that you're willing to take, then you have to figure out your size, right? And that's how you put a trade together. So as far as bullish or bearish, I mean, this thing's got a higher low and it's attempting to break out of its range. So, I mean, I like it generally. I like it as a long in general, but it really needs to prove itself by clearing that range. If it clears the range, you should be in good shape. So just keep that in mind. Look at these, because again, this is highly speculative, and this thing is very sensitive to any type of news that comes out about, the guy that's running it and all that kind of stuff. So just something to keep in mind there, right? And that's where technicals, when there's a lot of drama in a stock or it's very news driven, technicals tend to take like a back seat at times. And that's what you have to realize. Technicals don't give us all the answers. And fundamentals are, I really don't like putting trades on based on fundamentals. I like to use fundamentals. If I ever even think about them, I like to have them in the background. Something like the way gold is working right now. Okay, so that's SPCE. All right, again, if you have any more questions about it, let me know. So let's take a look at Wynn, which is these are the resorts and casinos. So this one, obviously, this is one of the hype stocks, okay? We saw a lot of this with a bunch of stocks recently, like the Norwegian cruise lines and all that. They all broke out, they all pushed up, and now they're all pulling back. So here's the thing, if anything, if you're gonna buy it, well, now's a better time to buy than buying it up here, right? Same with like the Norwegian cruise liners and all that. People were all excited up at these highs, and it's like, well, why would you buy there? Now, if there's a time to buy, it's now because you have the pullback. But this is just basically giving you the location, all right? People make the mistake and they say, oh, time to buy. I'm just going to jump in. But there's no reason to buy in terms of setup. There's no setup there. So you just have this bearish candle and you have a potential higher low. And this candle has pulled back into this consolidation range, which is a great location. What you need, though, is a setup. Right? That setup will give you confirmation that others are buying and that your reward risk will at least make sense. Because right now, if this momentum continues and you buy it, it just keeps going. You're like, oh, this thing never bounced. And then you just get caught in something that if you had just waited for further confirmation, you could have just steered clear of that type of bearish momentum. That type of mindset and technique saves us from a lot of stops. Okay, a lot of stop outs that we otherwise would be caught in, we're able to avoid, and that's because we wait for confirmation. Now, waiting for confirmation means you're going to give up the best price, but who cares? We're only looking for momentum, and we're looking for the probability of being on the right side for some short period of time. Okay, that's what a swing trade is all about. So, going back to this, you're at the right location, you need to see a pin bar. You need to see an inside bar, something that's bullish here, something. And that at that point, you can then start measuring your risk from the initial candle and the low of this range, which is 71.20. So you figure maybe you give it like an extra dollar, maybe $70 maybe, is where you can measure your risk from and go from there, okay? And if you're wrong and it gets stopped out, hey, you knew your risk in advance, and you must know your risk in advance for all of these. So, but as far as strong or weak, I mean, I like the structure is bullish, right? You have a higher high and you have an attempt at a higher low here. It's possibly giving you a higher low. If that can hold, testing this high here of 108, or at least the whole number 100, is very reasonable once you get your confirmation. That's how you have to look at that. So thanks for bringing this one up. It's in a great location. All right, AXP. Let's take a look. AXP. Great questions, everyone, by the way. Thank you for asking. AXP. Let's see. So, oh, American Express. All right, look, the chart looks very similar, doesn't it? Right? Looks similar, except what you have here is a potential double bottom situation. Now, let's take a look at this. One thing I notice right from the start, okay? Because again, I don't look at this stock much. I'm not familiar with the stock. But right from the start, you have an old resistance right here at basically 100. And look where we are now. Okay? Look where we are now. We're fooling around at 99.5. And we're getting some buying activity there with that bullish candle. All right, so now you have this little mini double bottom off of an old resistance, new potential support. Now some may argue and say, well, but you got this lower high. Yes, that's a lower high, but what counts more than that lower high, because these structures like double bottoms, double tops, and all that kind of stuff, they can appear randomly. So yes, that's a lower high, but you have to look at the broader structure, which basically consumes more time. Look how much time this structure took to develop. It took a lot of time, right? What is that, like a month and a half, almost 2 months? With this lower high, it didn't really take a much, it's only like a few days. So that's going to carry much less weight. This structure, this broader structure is what's in play. So if this holds, right, that lower high will get taken out, most likely. So this is not a bad location. Much better than buying up here, right, buying the high. Now, if this can hold and you take out this high tomorrow, okay, at 100.5. Again, you get a stock like American Express, you're going to need the S&P to cooperate with you. But as long as it does, I mean, we just looked at the NASDAQ chart, and that NASDAQ did not look like it was turning lower anytime soon. If the market cooperates with you and this thing goes, I mean, testing that lower high at a 108 area or this high over here at 115, that's all within reason over the next week. It's very reasonable if the market goes with you. So, and what's great about this location too is the reward risk is probably the most attractive here, because where are you going to put your stop, right? On something like this, since you have that double bottom there, 97.5. So even if you give it an extra dollar, 96.5, you're looking at maybe $3 or $4 of risk to try to make like at least more than 5. So your reward risk to reach like 2 to 1 on something like this is very doable. Okay, even 1.5 to 1. So that makes sense. All right, that's definitely in a good location. I like that stock. In fact, I'll bring that up to Andrew, see if maybe we'll even put that on our swing trade radar for a possibility. All right, one thing we don't want to do is we can't put 100 stocks out there. I know a lot of people come to us and they want action. You know, they want to see like 10 trades a day, but we can't do that. And the reason is, if we have everyone, you know, all up in these positions and the market turns, then it's not going to be very pleasant. Okay, so that's something that we always have to keep in mind, and that's one of the ways that we're cautious. Now, so let me see what else I have here. My CFD broker also has the option for a guaranteed, okay, which is more expensive, so a wider spread. Is it worth looking at in Bitcoin? Well, so Reese, I mean, they're giving you a guaranteed stop loss target. That's kind of like what BitMEX does, sort of, right? They basically margin you out at a certain price. You're giving them more control. Basically is what you're doing. I personally don't like to do that. I like to, you know, have my stop figured out in advance, and it's my stop. I chose it for my reasons, and that's the risk I'm willing to take, not what the broker determines for me, because usually it's to their benefit. Okay, so good question. Good question. Is that worth? So which, I mean, Bitcoin, the Bitcoin CFD obviously can gap, you know, but it's not going to gap unless it's a Friday to a Monday, right? Because the Friday night it closes, and then Sunday night it opens. That's where the gap can be. But during the week, it really shouldn't gap, because it should be trading 24 hours. So yeah, so that's something to keep in mind there. All right, okay, no problem. So Dave sent out a trade idea on May 27th. Dave, right? Yeah, so Dave has been good. I mean, he's very conservative, and he's been, you know, he has his stocks, he has his system, and he follows it to the T, you know, and it's a great chat room. You know, he's very careful about his stuff. He measures everything in terms of risk. And that's why we have a guy like Dave on our site for people that are just interested in stocks, especially more conservative stocks, which is typically good for people that are more of like investment oriented or have larger, they want to trade larger positions, but they don't want to deal with all the craziness that can come with something like that. Okay. So yeah, thanks for mentioning that, DJ. So Reese, okay. So the bounce today is because they signed a deal with, okay, right, okay, right. So Reese, all right, so that's going back to the SPCE, right? So that's going to be very news sensitive, and you know, that's something you have to keep in mind for that. Okay, Iovance. Let's take Iova. This is one I know Andrew's been talking a lot about this. I've been looking at this one too. Hold on, I didn't put the right symbol in here. IOVA. All right. By the way, for those of you that are new, at this time, around 4:05 p.m., it's not 4:05 yet, but around this time is when we usually do our podcast. I just want to remind everyone we're not doing our podcast today. We'll be back on next week at 4:05 p.m. Eastern Daylight Time. So make sure you check it out. Make sure you subscribe to our channel here. And when we do the podcast, you'll get a email notification from YouTube, and you can listen to us in real time and ask questions and stuff. All right, so Iovance. This thing, we've been talking about this level here at basically 31.25. This is a key support. It took out the support, but as you can see, it's been hesitant to go lower. Now, this is interesting. It's in a good location. It's giving some good bullish signs here, right, for a long. But the one thing that I'm not too crazy about with this, because it's got plenty of potential. Look at all this potential. Even if it goes back to this level here, which is 38.73, which is very reasonable. It's got some nice potential, and relatively speaking, in terms of risk, it's not huge risk. I mean, you're looking at 28.25, so maybe 28 even, something like that. So you're looking at a few dollars worth of risk. What's this thing at? So maybe $2 or $3 worth of risk to try to make 5 or 6 or more. The reward risk makes sense. The problem here is I don't like that the market is on its highs and this thing is lagging. I'm not too happy about that, because if the market turns, where is this thing going to go? All right. Also, remember, this one is also very sensitive to news, and any type of pharma news or biotech news can affect this thing quickly, right? That's what this thing is so sensitive to. So you have to keep that in mind. It probably doesn't follow the market to the T, but if the market does turn, as you saw back here when you had that nasty broad market pullback, this thing pulled back. Okay, it pulled back. So if it's acting relatively weak, that's a concern. So what do we do with something like this? What if it gives the buy signal? The reward risk is attractive. Well, something like this, again, perhaps we take this with a 1% risk, and if it turns on us, we just get out. But if it realizes some of that potential, hey, this is how we've managed to get into a lot of stocks this way during this broad market rally, right? Maybe they need to catch up, and it's lagging at the time of getting them. I mean, look at Roku. Roku, when the market was pushing higher, Roku at one point was almost stopping out. And I remember telling everyone, man, this thing is not behaving well, but we have to just give it a chance. And now Roku is almost pushing its third target. So that's something you just have to keep in mind. I don't tell you about the lagging thing to scare you out of this thing. I just tell you about the lagging thing with the market, because it's a variable that you just have to be cognizant of. Okay, and because it can help you make a decision. If the market starts pulling back and this thing starts to get ugly, maybe it gives you an opportunity to take a smaller stop. You're like, well, I don't need to take a full stop. The market's pulling back. This thing sucks. I'm getting out. Okay, and it makes you more decisive, and that's very important. Okay, having that type of confidence. So as far as the setup, the location, everything is good. This looks like a long. There's no question. Okay, it's in a good location. You're basically getting a setup, and you got plenty of potential here. Okay, you just need something to push this thing along, whether it has its own news or some news relative to some sort of catalyst that gets this thing going. So that's Iovance. I definitely like it as a long. I know Andrew's been talking about this a lot as well in our chat room. Okay. So yeah. Okay. Talking about, yeah. So that's the story with that. All right. TGNA, pal. Okay, let's take a look. TGNA. All right. Now, I'm not familiar with this stock. Tegna, I'm not familiar with it. But let's see what's the story. Let's take a look. First of all, I like the price. It's inexpensive. Okay, it's not like a $400 stock or anything. Just looking back here a bit, I mean, obviously it's pulled back. It's not near these major highs up here, so that's good. It's had this initial push recently, and it's pulling back. And today, you know, we have this nice push off of this failed low situation, which also happens to be a higher low relative to this consolidation. So great location, okay? Great location for a long. In terms of risk, well, let's see. This low is 10.55, so 10 and a half. You figure you're not going to put it right there. You figure it's going to have to go like here, lower. So 9.5, something like that. And the potential that you're looking at is 13. So, you know, you're looking at maybe risking a couple of dollars, maybe $2 to try to make 4 or something, 3 or 4. So the reward risk makes sense because you can't sit there and assume it's going to go all the way up here. Okay, I mean, we want to be realistic. And the first resistance was here at 13 and a quarter, which it was just there like, what, a week and a half ago? So in theory, we have a higher low. It should, in theory, push that high, at least test it and try to push it, which offers potential. So again, I'm not familiar with what they do. So I don't know how well this thing is, how sensitive this is to the broader market. Considering how the market's been rallying, I mean, this thing looks like it's sort of underperforming. But hey, you know what? They don't all follow it one-to-one. So if I was looking at this chart alone, not considering the market, definitely higher low. I would be anticipating the higher high, and the reward risk is attractive. So thanks, pal, for bringing this one up. This is a good one. Definitely, you know, one that we can look at, you know, consider for some trades, you know, ourselves. Again, the thing is, we can't call 50 different stocks at the same time. So what we do is when we have all these setups, we look at the best ones, and we're the ones that have the greatest potential, the least amount of risk, you know, and the ones that we think make sense for our followers, and then we'll pick that one. You know, that's basically what we try to do, because we always have to be mindful of the risks that, you know, behind the ideas that we're sharing. It's very important. A lot of these other gurus and a lot of those sites, they don't care. They just put out signals. They don't care. It's up to you what happens after that. And okay, that's fair, but we try to be more mindful than that. Okay, so AT, thanks. I've learned a lot from you guys. Great. Oh, great. Cool. AT, cool. Well, thanks for joining me here. You know, so those TradingView ones I do once a week, and I update that more here on YouTube, obviously. Okay. Oh, okay, cool. I didn't know that. Okay, cool. So yeah, I mean, so that means they're not going to be sensitive to biotech stuff and stuff like that. So just looking at it from a technical perspective, it's definitely in a good position to at least test higher prices, and your reward risk it's attractive. It's within reason. All right, so excellent. All right, everyone. So how long have I been talking for here? I've been talking for a while, right? I talk too much. Let me see here. Yeah, so 45 minutes almost. So do I have any other questions before I wrap this up? So again, if you're new to Greenbridge Investing, make sure you check out our website, greenbridgeinvesting.com. Make sure you subscribe to the channel here so that you can get these notifications when I do these live. And make sure you check out our podcast next week. Okay, so Pal, do you pay any attention to the broader patterns like cup and handle? Okay, Pal, that's a good question. It depends, okay? I mean, I'm only interested in the broader patterns, for one, if they're within the same structure. Like for example, like if I see something like this, like this could be a potential, this could be mistaken for maybe a double top, something like this. I'll ignore something like that. Why? Because I see the bigger pictures. The bigger picture is a possible range bound situation, right? Especially if this thing doesn't take out these lows. I mean, just as a quick example. So it really depends on the context. I'd also be, if whatever structure is larger is what I would give more weight. So now, like for example, if I'm looking at it by this point and I'm like, oh, well, look, it's held all this time, that would carry more weight than these bearish structures, because the bullish structure is holding and it's longer. time does have an effect on these things, right? Just like now, we have a potential double bottom situation. Okay, it hasn't been around very long, but we have this broad bullish movement, which gives it context. Okay, here, let me highlight that. This gives it context, right? That gives that double bottom context. That's how I treat chart patterns, right? So something has to give it a reason to make sense. If it appears out of nowhere, you know, if like a head and shoulders or triple top or whatever just appears randomly, I need to see it in some sort of context in order for me to assign some sort of weight to it, if that makes sense. Okay, so good question on that. All right, so again, I think I'm going to wrap this up now. Unless there's any other stock questions here, I pretty much got everyone's question. I want to thank you all for taking the time to watch my analysis video. Check out greenbridgeinvesting.com. You know, so I try to do at least a couple of these a week. And you know, I'm here to answer your questions about particular stocks or even other markets. If you want to see, you know, other Forex pairs or whatever, you know, feel free to come along and ask. All right, so I want to thank you all again for joining me. Make sure to check out our podcast next week, all right, which is the Talking Market Show with Mark and Andrew. You can check it out here on this channel. Make sure you subscribe to the channel. And great, I'm glad you guys enjoy it. I'm glad you guys find it helpful. It's my pleasure to provide some sort of clarity and some sort of perspective for the coming week. Okay, great. All right, everyone, so have a great day. Enjoy the rest of your day, everyone. And I will see you in the chat room. Thanks for watching.